That's what's going to happen. And blockchains, plural, are the mechanism for doing this. And Bitcoin is simply the first application of blockchain, but its distinct application was to money and value and property. Because you and I, this is amazing, you and I can exchange something of value directly, peer to peer, no intermediary, no fees, no expenses, no charges. If I want to send you money, right, fiat currency, you have to have a bank account. I have to have a bank account. They charge us fees for that. I send you a wire transfer. They charge me a fee for that. And eventually you get the money.
Takes time.
Well, that system worked really, really well for hundreds of years, 838 years to be exact. And now we have a better system. And as more and more people realize that, we went from 20,000 a year ago to over 70,000 today per coin, and a market cap well in excess of $1 trillion. Although it's so funny, he says, Dad, yeah, you were right, fine, but you didn't lever up and put all the money in Bitcoin. I'm like, you little, yeah, okay,
you got you there,
because I was afraid, right? And in 16, I finally got, and so it took me a while. So in 17, right, we went from a couple thousand all the way to 20,000 in 18. So 20,000. And I remember the day, it was December 18th. And I remember they approved the futures. I'm like, oh, that's bad. That means now the big institutions come short this thing and we're going down. And I don't know how far down we were going to go, but we went down, and we went down to 10 and then to 6. And then at the end of 2018, November 2018, went all the way down to 3. And people were like, oh, it's over. And I actually remember I was on TV, I was on CNBC on that day, December 6th, 2018. And, the host says, what do you think is going to happen? Isn't it going to zero? I'm like, no, it's not going to zero. And in fact, we just put out so in the beginning, every 10 minutes, they would create a block. And in order to create a block, you have to have miners, which are basically just computers, to cryptographically secure that data, create a hash. Okay. And in order to entice someone to buy computers and pay for electricity and do this, you pay them what's called a block reward. So the way Bitcoins were created is every 10 minutes, back in 2009, 50 Bitcoin were awarded to the miners. Every 4 years, that number gets cut in half. Well, if you think about that, the genius of it is if you cut the rewards in half, well, then some of the miners would go out of business. Well, the miners don't want to go out of business, so they hold their Bitcoin longer until the price rises, because that's how markets work, right? People say there's more buyers than sellers, or more sellers than buyers. No. There's always the exact same number of buyers and sellers. That's how a transaction works. It's the price that adjusts. If a buyer wants to really buy, like right now, every day on the NASDAQ, right? That's the price for 100 shares. The problem is if I'm Bill Gates, which I'm not, but if I were and I had 1 million shares and I wanted to sell, you don't get that price.
Yep.
You're going to actually get a lower price because in order to sell 1 million shares, you've got to incent people to buy, and people know you got to sell a lot of shares, so they're going to offer you a lower price. So that's how markets actually work. So as those investors, people like me, I consider myself a value investor. I like to buy things below fair value. So when the price was 15 and the fair value was in the 40s, I'm waving it in. Like,
come on in, yeah.
So I'm going to buy it. So that was a year ago. And for the last year, we went from crypto winter in 21 into crypto spring, right? Which is where the price kind of stabilizes. Then crypto summer, which we're in today, right? So from June of 23 to June of 24 is crypto summer. And crypto summer is where you start to get back to fair value. So fair value today is in the low 50s. Well, we got there right before you just got to keep focused on the long term and understand that every asset goes through these cyclical emotions. And remember, again, you're young, I'm old. So Amazon is a great example. Amazon launched 1997, went public 1997, 98. And stock went roaring up into 2000. And then we had the tech wreck. The stock went down 94%. Think about that. 94% cover, Amazon.bomb and all this stuff. And was that a good time to sell? Heck to the no. That was when you should have been buying with both hands, but no one did, right? Because they thought it was over. And here's the crazy thing about Amazon. Amazon's been a public company for 28 years. 28 years. In every single year, every single one, it's at a double-digit drawdown. On average, 31%. So on average, a couple times a year probably, where I go to the ATM and I punch in my code and it says 0. Like, whoa, how would I prove it's not 0? It's their word against mine. I don't have a physical statement. I haven't had statements in 10 years. And I trust them that and look, 99.99% of the time, those banks, those brokerage firms, those accountants, they're trustworthy. The problem is that 0.1%, it's really bad for the person who, loses the trust. So in this triple entry accounting world, in the world of blockchains, where blockchains become the computers and we can store value, we don't have to trust because we have truth.
Truth for trust. Yeah.
That's what we're really doing here, is we're swapping this trust world for truth. And truth comes from this technological innovation called blockchains. And Bitcoin is just one application of blockchains. There will be many other applications of blockchains, things like title insurance for your house and your car, and we won't carry around a driver's license, right? I don't want to pay a lot for that. So I could use maybe the Solana blockchain and use the Phantom wallet. Or, maybe if I want to do a cross-border transfer, I may not want to, pay the high gas fees for Ethereum. So I may want to use a layer 2 like Base that Coinbase has come up with. So the idea of technology is you can either be fast or secure. Take your pick. You can't be both, right? So if you want to be really, really secure, you can't be really fast. If you want to be really fast, you're going to be less secure. So Solana's super fast, but occasionally the system breaks down because its clock moves too fast. Bitcoin, it's not fast at all. Never claimed to be. It's just super secure. It's never been hacked, not once.
I was going to say,
and it's only had like 22 minutes of downtime in 15 years. So it's super secure. And so if we think about the other things, people say, well, if you don't like Bitcoin only, then you're a shitcoiner, technical term. Like, well, that's kind of silly.